Hello and welcome to Dairy Pod. I'm Kristen Davis from Dairy Australia. In this episode, Dairy Australia's Analysis and Insights Manager, Eliza Redfern, and Head of Economics, Data and Insights, John Droppett, discuss the May Situation and Outlook report. Eliza and John highlight the recently completed National Dairy Farmer Survey and look at the top-line trends from the S&O report. The conversation covers farmer confidence in the industry, as well as milk production and demand, both domestically and internationally.
Welcome to the Dairy Pod, John.
Thanks for having me on. Always a pleasure.
Excellent. Look, you haven't been on the podcast for a little while now. And I guess for those who haven't heard you before or haven't heard you present in the regions, wherever it may be, do you want to just tell us a little bit about who you are?
Yeah, so John Droppett. I've been at Dairy Australia for about 12 years now, and I head up the Economics Data and Insights team, which is a group of people at DA that essentially have the overall job of helping people make better decisions in the dairy industry, whether that's on farm through delivering programs like Our Farm, Our Plan and the farm performance tools and programs, whether it's in the market through the Market Insights team, or elsewhere supporting the activities of Dairy Australia internally. That's essentially what we do.
Excellent. Very good wrap up. So, and I'm Eliza, of course, which would have been in the intro, and I report into John, so part of the EDI team at DA. And as part of the analysis section of that broader team, we run a lot of different reports that we publish throughout the year. And we have our quarterly situation outlook report, which has just been released, our May one. And that's basically what we're here to talk about today. So I guess some of the key things from this report, we've had our National Dairy Farmer Survey that has run this year. So we've got a lot of our key results within the report, a lot of discussion around milk production from this season and what that might look like for next season as well. We've also got some detail around input costs related to that, and then what that milk production picture is like globally too, because as we know, that has had a big part to play when it comes to export prices, especially over the last year or two. But it's obviously one thing to read it all within the report, but then it's another to have someone actually talk you through what some of those top line trends and data is. So I guess, John, a good place to start might be what's happening within Australia, especially on the ground level at the moment.
Yes, obviously every region has its own experience in terms of weather conditions and what's been happening seasonally. But sort of to make some broad generalizations of what we've been seeing, it's been a heck of a lot better season in most regions than last season was, 22-23. Winter was drier than average for most, which obviously makes for a more convenient winter. Spring not too bad, and then we had some pretty decent rainfall late in spring across a lot of areas that helped extend the spring effectively. And really contrasted with what the expectation had been at the time, which was that we'd have El Nino impact on rainfall, and that would actually have the opposite effect and shut spring down pretty early. So it was a really pleasant surprise, I think, for a lot of people there through spring and into summer, a very elongated season. And then since then, we've kind of had probably below average rainfall in a lot of areas, but in many cases, the timing of that rainfall's been pretty fortuitous. There's been substantial events, and then there's been sort of drier periods, but then big rainfall events again. Now, some key exceptions to that, obviously, Western Australia has been really dry, Tassie and parts of Western Victoria into South Australia as well. So it's always risky to generalise about the weather because everyone's having a different experience. But on the whole, it's been a fairly significantly better season than last year, and I think, a lot of people probably waiting for follow-up to the autumn rains that we had, along the East Coast, a few weeks ago now, or even a couple of months ago. But providing that those come through and help back up, get the pasture up and get some of that autumn, or what's left of autumn growth happening, we'll be okay. But on the whole, much better. I think the outlook is fairly neutral at this stage. There's been talk of both El Nino and La Nina, so go figure.
Yeah, for sure. I guess, from that water availability perspective, we've obviously had several La Nina years. Now we've had El Nino, and there were questions around what that might mean from a soil moisture and water availability perspective, and for water prices too. But we've seen that sort of been quite subdued on that front with all of the unexpected rainfall, especially over summer. What else is happening within that input cost space at the moment?
Yeah, so, and I suppose to cover off on the water, the bigger debate around water and the bigger challenges around that's probably the longer term policy settings. I think that's probably kept people a lot more, anxious than the short term situation, which, as you said, has been pretty good. In terms of other costs, yeah, good season makes for good feed prices, doesn't it? I mean, costs, across grain and hay have in general come down off their highs in 2022 and certainly well below the peaks back in 2018-19 through that dry period as well. In historic terms, I think across a lot of regions you'll find grain and hay are still fairly expensive, and that's a theme we come back to across most of the major cost lines. Things in general are expensive, so that is keeping pressure on farm costs, but certainly the heat has come out of it since those spikes we saw in 2022. And similarly with fertilizer, obviously much more impacted by what's going on globally, and huge spikes through 2022.
There obviously has been a lot of that market and climate volatility, especially over the last season and the last several seasons over the last 5 or so years. More recently, and obviously that impacts what's happening on the ground level. It has impacts right across our industry, as we know, and sort of has that impact on sentiment on farm as well. So, as mentioned before, we've obviously got our key results from the NDFS within this S&O, but can you run us through what some of those, some of those key changes within sentiment have been on farm over the last year?
Yeah, sure. And most people will be aware of the National Dairy Farmer Survey because, a large proportion of farmers will have been surveyed at some point or another. This year we surveyed 600 farmers, which, out of 4,000 nationally is fairly strong coverage for a survey of this sort. And this data isn't too shocking. It shouldn't be shocking, but it puts rigour around some of the things we talk about in terms of farmer sentiment, challenges, and farmer expectations around profitability. We obviously have Dairy Farm Monitor coming later in the season, which really takes apart financial performance and farm profitability in a much more rigorous manner. The National Dairy Farmer Survey looks at what farmers are feeling about how profitable they are, where the business is at, and how confident they are in general. And on the whole, confidence is pretty stable. Nationally, farmers are slightly more positive about the industry's future, so up 1% for what it's worth to 68%. In terms of their own businesses, down 1% to 83%, feeling confident about the future of their own businesses. And I think that change is off the back of a slight decrease in expectations around profit. So, of course, the milk price came down heading from 22-23 into 23-24. We saw a lower milk price. Costs, as we said, came down somewhat as well. But still profit expectations are lower. About 4% of farmers expecting, or 4% less farmers in the survey expecting a profit in this financial year versus last financial year. So that's obviously impacted on sentiment. That all being said, one of the key trends that's come out of this survey is around business expansion. And there's obviously, economic concepts and expectations that they feed into around this about, we've had a succession of fairly profitable years across most regions in dairy and probably a run of profitability that, going back a few years prior, we could have only dreamed of. Now, of course, there's challenges around labour. There's challenges around, farmers and all farm businesses and the experience they had with the step downs and all those other things. There's challenges. We had COVID. It's been, it's not been a boring world. It's not been an easy place to make money. But nonetheless, you could, the combination of milk prices and feed costs and farm profitability has been very strong, and you ordinarily would expect a lot of investment and a lot of growth to come out of that, and that we haven't seen that for a lot of the reasons that I mentioned, and the survey results this year really back that in. The share of businesses in an expansion phase is only up 1%. We had 23%. So less than a quarter of farm businesses looking to expand. The vast majority, nearly 2/3 in a stable phase. So either not being able to expand because of some of the constraints that I mentioned, or just being comfortable at the stage they're at and not wanting to grow their business for whatever reason. Happy with the scale that things are at. So we haven't seen a whole lot of momentum around growth. Is one of the key takeouts, and we don't expect that to continue. We'll talk about milk production in a second, but we don't see the drivers of that growing significantly in the near future. The other part to come out of it, of course, is around challenges and what farmers see as the key challenges heading into the next 6 months. Milk price is obviously increasing. It's around about, or it's increasing on people's radar. It's around about 20% of respondents to the survey see that as a challenge for the next 6 months. That's up from around 15% last year and less than 10% the year before. That stands to reason, right? As the milk price has eased. It's been seen more as a challenge. Other challenges have come off a bit. Labour coming down a little bit. Input costs coming down a little bit. Again, makes sense because availability of labour is slightly higher. Of course, still a significant issue, but and cost of inputs have come off. So it all kind of stacks up that you'd see those challenges starting to ebb a little bit in farmers' consciousness. One that has come back again is around climate and weather. That's up over 40% of farmers, close to 45, I think, seeing that as a challenge in the next 6 months. Again, off the back of some of what we've seen, those extended dry periods, and potentially the weather outlook at different points as well, and regions that are struggling with drought at the moment. So some key outtakes there, but nothing too shocking, and yet probably feeds well into the discussion around milk production.
Yeah, absolutely. So, I guess that rising concern around the climate picture, and we've already mentioned a few times already about, the difference in that climate experience in many different regions across Australia at the moment. How has this played out from a milk production perspective, especially considering, the season that we had last season as well?
Yeah, so that's we've seen some recovery in milk production. We were up about 3% for the season. By the end of the season, we're expecting to be around 8.3 billion litres nationally, which compared with the sort of decrease, I think around 5% that we saw last season. We obviously haven't made up all the ground that we lost with really challenging season in 22-23, floods, wet conditions, farm exits, of course, the longer term challenges all added up to really bring milk production down. This season we picked up some because we had a much better spring in most regions, pretty decent conditions through the follow-up, profitability still good, so on and so forth. There are new investments, there are farms out there that are growing production and building new infrastructure. But on the whole, as we saw with the survey, a lot of farmers are in a fairly stable pattern. Pick up a bit of milk when times are going well and seasonal conditions and profitability permit, but not massive amounts of structural growth. And that's, I think, what we're seeing here. A lot of green ink on the table, a lot of improvements on last season, but again, around that sort of 2 to 3% mark, which is more making up ground than pushing forwards.
Yeah, for sure. So I think we've obviously had a lot of focus on what's happening within Australia so far. But, that probably leads us into now what is happening within the broader market, and especially from a global perspective as well, because as we know, we are Australia, but, and I think a lot of people like to think we are an island, but essentially,
we are technically an island.
Yes, true. Very true. We are technically an island. But even considering that, everything that's happening globally can impact us all the way over here. So what is going on within that global space, and what might some of that potential impacts maybe for new season farmgate milk prices be?
Yeah, so certainly what we see globally is, I guess to go back a few years, a significantly different picture. We talk about growth and the outlook for growth in Australia being fairly subdued. not a whole lot of momentum out there. It's a similar case across most of our major dairy competitors. So, Europe, where we were seeing massive growth through the 2010s. New Zealand, where we saw years and years of significant growth as well. That stuff's not happening anymore. We're not seeing that structural, sustained growth that really put pressure on global markets. It's more of a cycle. Again, good years things are up, bad years they come down. And the last 6 to 9 months, we've seen milk production starting to contract or contracting on the whole across most of our major competitors. So, Europe had a significant downturn. The US has been, seen milk production dropping away, and we're talking about, in the region of 1%. So not huge drops, but things have been easing when conditions have been more challenging. New Zealand's been up and down this season, and on the whole, milk production's sort of just been ebbing, really. It was down somewhat earlier in the season. It's recovered a little bit, and I think across the major 4 exporters that we look at, Australia, the US, New Zealand, and Europe, we're treading water at the moment. Milk production's about flat. So not really putting pressure on markets, and probably fairly timely in the sense of what we're about to talk about around demand. But we're not seeing a whole lot of supply pressure out there at the moment. But at the same time, milk production's not really short either.
Yeah. So obviously that whole picture of milk production being flat, stability, we were talking about lackluster earlier yesterday, which seems to be a fairly good word to discuss what's happening in that demand space, which, has been relatively unchanged almost, considering all of the overhead clouds and pressures and headwinds that there are in that demand space. Do you want to give a bit of a very quick wrap in terms of what's happening in the demand area?
Yeah, so we look at the key markets really, and key markets for Australia being Japan, Southeast Asia, and of course China. And the real mover there is of course China, and we've seen demand in China or exports to China really coming off again in calendar 2023. That's important. Yeah, we look at 12-month totals because there's a lot of seasonality in exports around the quotas and an allocation of those that pushes a lot of volume into certain parts of the year. But Chinese demand is down. Volumes to China are down, and a big part of that is because Chinese milk production has been growing strongly for a couple of years now. But also the Chinese economy is struggling as well. So the biggest part of demand is what's going on in China, and what's going on in China is that there's less demand for imported products. So that's kept markets, as you say, lackluster. Southeast Asia has its challenges as well, and it's we probably haven't got time to dig into those one by one. But to generalise across that market, demand is down as well off the back of economic challenges, consumer purchasing power, and risk aversion among importers as well. And Japan, similarly, economic headwinds and demand coming off a little bit. Neither of those as dramatic as the sort of volume drops we see in China, and certainly, heavily analysed markets with a lot of data available. But, on the whole, lackluster is the word to use for dairy demand globally.
Yeah, absolutely. So I think that, considering what's happening in the global fundamental space with supply, demand, that obviously brings us quite naturally to the export space and with commodity prices. And there seems to have been a fair bit of movement, especially over the last season, in that space.
Yeah, so prices have moved a lot in aggregate, but they've really just been drifting over the course of the season, almost since shortly before opening prices were announced last season here in Australia. We've seen commodity returns drifting downwards is probably the key factor there, and that's on the back of the things we talked about. Lackluster demand, supply not enough to upset the apple cart, but certainly not enough to to resurrect things either. And so it's not been a disastrous time on global markets by any stretch. But there's not been much excitement either, and we've seen prices come off substantially over that over that period of time. There's been some recovery recently in terms of the dairy fats, But the challenge for Australia is, of course, we're a net or we're a fairly balanced market when it comes to dairy fats. We're a significant net exporter of protein. So it's the products that we export in significant shares, cheese and skim milk powder, for instance, where we haven't seen that recovery in prices. So certainly challenges there globally in terms of export prices. And part of that too is, around exporter behaviour. So, importer, exporter, the commodity traders, and the risks they're prepared to take. And so, when things are pretty lackluster, they're less willing to load up on product because they don't want to get caught.
Yeah, I think the economic headwinds piece, is obviously very relevant from a global perspective, as we've just discussed. But sort of bringing it back more to domestically, consumers, again, from a global perspective, are making those decisions around when and how to spend their money, considering this high inflationary environment and the impacts that has had on their spending. And Australians are obviously going through that process too, and have been for the last 2 to 3 years during that period. And I think we're seeing some improvement there in terms of the volume sold of some of the key within the key dairy categories.
Yeah, certainly. So across most of the categories, so cheese, spreads and yogurt, volumes are up. But of course, we're talking 1% to 2% growth, which, when you look at the numbers around population growth, in per capita terms, we're still seeing consumption drifting or, easing. White milk itself, or liquid milk itself, is down 1.5%. So consumption there has dropped per capita as well, and in aggregate through supermarket sales. So volumes are certainly under pressure, but not. Dairy is a very mature category, and we don't tend to see, in the retail market, we don't tend to see dramatic changes all that often. The major change that still benefits the industry is around the price increases that we saw, going back 12, 18 months, which still mean that the volume or the value growth in aggregate is nearly double digits, or is double digits for cheese and dairy spreads. So higher prices, even though volumes are fairly static or slightly lower, mean that there's more money coming into the supply chain, and that is helping support demand for milk at the farm gate. But I think that sort of inflationary period is probably, the peak of that has passed, and we're not likely to see ongoing inflation. We've certainly seen a reaction to it now, and it's become a political issue what's going on with grocery prices as well. So I think it's unlikely that we'd see a continued push there, but certainly we're a long way from dollar milk now and $6 a kilo cheese, and so that's certainly a positive thing for the local industry.
The cost picture, from a consumer perspective is quite a large one within the current market, especially, and everyone's sort of looking to where they can save those costs, and it might be gravitating towards private label or purchasing on promotion. There's a lot of different tactics that consumers are going towards to try to save money where they can in the broader retail space. But something that we haven't touched on yet is more around imported dairy products coming into Australia, and that's been a bit of a hot topic this season especially.
Yeah, it certainly has been, and what we've seen this season is something of a disconnect between global prices, which most farm gate prices dropped significantly internationally year on year over the season we've had, whereas in Australia, obviously, due to the way that farm gate pricing works under the dairy code, that didn't happen, and so dairy product globally has been fairly competitive in Australia, and that means in short terms imports are competitive. And 22-23, when we saw prices peak here in Australia at the farm gate, we saw a big increase in dairy imports across all products. The season just gone, or the season that we're in now, we've seen milk production recover somewhat, as we talked about. And so that has displaced those imports to some extent. Our exports are less competitive as well. So imports have fallen around 7%. But I think we've kind of had the, 2022-23 kind of provided a bit of a lesson in what happens when we're less competitive globally. And the challenge is more of a medium-term one as well. That once these, we're going to have volumes that ebb and flow a little bit, but when you've got retail customers or food service or ingredients customers that transition to imported product or begin to accept it, they're more likely to either retain that supply arrangement or to opt back in the future more readily. So it's hard to get rid of imports, I suppose, once you start to see that acceptance across different levels of the supply chain. And so the more that we kind of push, inadvertently, but the more that we push customers in that direction, the more exposed we are effectively to imports. So I think the volumes have eased somewhat, but I think the principle's kind of been proven that we've got this global competition, as you said a few minutes ago, is very much here to stay.
For sure. So I think trying to bring all of what we've just discussed together into one, which is something that we love to do in our position. What are your feelings in terms of how all of this will pull together when it comes to June 1st?
Yeah, well, that's what everyone's interested in, and congratulations if you've made it this far. I think we've sort of painted the picture of markets overall, and we've seen announcements already around farmgate price. We get to June 3rd, I think, because the 1st is on a weekend. We're going to see more announcements, of course. We've talked a lot about the market, and those announcements that we've seen, I think, give us an idea of what the zone is going to be for farmgate pricing. The bit that we haven't talked a whole lot about, but is also just as relevant, is around the broader strategic thinking and what the priorities are within milk processing businesses that have to make a decision about what price they're going to commit to over the course of the next 12 months. And what the priorities, as I said, what the priorities are for those businesses. So I think a year ago we were in a situation where there was strong competition for milk to keep throughput in factories, to meet contracts, and to just to make sure that supply was there. And that, I think that drove what we saw last season, where prices were driven probably higher than I think a lot of people anticipated, which was a fantastic thing on farm. It helped ease the burden of those feed costs. It was the challenge of El Nino we were staring down at the time, and so certainly a good thing for farmers. But I think from what you see with the ASX filings, some of the divestment decisions or factory closures that we've seen in the last few months, I think that's come at a cost to the processing sector, and it's probably a reason I would suspect that we won't see the same level of aggression again when we move from the opening prices to response and counter response. And some previous years we've seen something of an auction taking place as bid and counter bid, and I don't think we'll see as much of that this year. I think there's always a chance that we will, because the kind of market takes hold, and I might have I might have misunderstood the priorities there, but I think we'll probably see less of that this year, more of a hesitation and I think probably more willingness to lose some milk supply, at potentially erring on the side of that rather than trying to secure it, and that's probably going to be the key difference, regardless of what the market says, what the market suggests. The upshot or the upside of that, I think, later in the season would be the potential for more step-ups than what we've seen this year. If we see market conditions improve, again, global dairy supply is not significantly growing. If we see economic recovery, if we see conditions improve, and milk production is contracting, or there's demand for more milk within Australia, we'll see that passed on in terms of farmgate price to stimulate that sort of response. We certainly, I don't think we'll see it early on. At the same time, farmers have challenges as well. We've got those high costs, persistently high costs there, and I think in weighing up that decision, processors aren't going to want to throw out the baby with the bathwater either. And obviously, if the incentives aren't there for farmers, that'll play to the decision making that farmers will make, and we'll see things. We'll see milk production drop. We'll see farms exit the industry, and that creates a different set of challenges. But I think we're going to see less aggression this June. I think we'll probably end up fairly close to what we're seeing announced at the moment. because I think there's going to be a lot of caution out there in the marketplace.
Excellent. Well, that probably is a nice little spot for us to wrap up. And thanks for hanging around, everyone, for listening to this episode, which is on the longer side for us, I think. But our situation outlook report just come out. It's on our website, so everything that John has just run you through, all of that detail can be found within the report via the industry report section on the website. So please go and give it a download. You can subscribe there too. And thanks for listening, and thanks for joining, John.
Thanks, everyone.
If you would like to read the full May 2024 Situation and Outlook report, you can find it at dairyaustralia.com.au/SANDO. We have placed this and other relevant links in the episode notes. We hope that you have enjoyed this DairyPod episode. If you have any questions or ideas for future episodes, you can get in contact with us by emailing dairypod@dairyaustralia.com.au. Thank you for listening.